All right. How's everybody doing tonight? Let's do the audio and visual check. What a freaking market, man. This market is just nuts. And I think everybody has witnessing the craziness of the summer. Gold is going. Yeah, we'll talk about gold. I seen it was breaking up. Looks good, sounds good. Okay, let's go ahead and just jump into it. Welcome to Slow Markets, everybody. I'm Coach Dakota, Coach DBA. There's our top step risk disclosure, as always, for educational purposes only, not a signals class. So, what a market. You can see I have the NASDAQ daily chart, and it's extremely volatile. It caught me off guard today. I'm so happy I switched my strategies up in terms of just going for smaller profits, because today was definitely one of those days. So we are at an area in the market, and we're gonna go over the NASDAQ as always and do the rapid fire. And if you have questions, feel free to type them in the chat. Our moderators will go ahead and feed me any of the questions that I do miss. I will get to them. So, you remember what I was saying last night? If you joined me last night, this was a key area for the market up here into these 700 resistance. Yeah, where's Coach J at? I wish I would have held that 712 short last night. If I would have held that 712 short on my live account, I would be a happy guy. Yeah, fire drill. Risk management is definitely on my mind in this type of a market. But I didn't hold my 712 short. I really wish it was one of those, man, I would have, could have, should have type situation. I was really looking for the market to just consolidate. Like, that's all I was really looking for this market to do, was some type of consolidation, some type of inside day, but we got nothing. We essentially had a bigger range than yesterday. Like, look at this. This was yesterday's candlestick from the lower 800s all the way up to 19,700s. And sure enough, here we are again. We went from 19,700s right back down, broke below 19,000, and we are right back down here to the 18,800s already. What can you say? There's not really much to say about this market. Just so volatile. It's I don't know. It's one of these crazy ranges where I don't even want to say like we're trending down. This is now, like I was talking about, one of those situations where, can this market be considered a bear market? Like, are we in bear market territory? Can we see further downsides outside of this initial move of 10%? And tonight, I'm going to say yes. I'm saying yes now, where this market structure from a technical standpoint is looking very ugly, right? Where this was originally, I was looking at this original move as a pullback. And yes, this was a valid pullback. Now we had this rally, and this rally has now turned around, and now there's something that we are looking at as a lower high. So this is very ugly from a technical standpoint, in terms of, for the bulls anyway. I think this is now looking at a lower high. Yeah, you could make an argument that this was a lower high, but to have a 1,000-point rally just completely reverse in less than 24 hours. Last night, I was talking about how we had a 900 to 1,000-point rally in 24 hours. Well, tonight, now we had a 900-point sell-off in the next 24 hours. And so where are we going to be at tomorrow? In another 24 hours, by the end of the day tomorrow? Anyway, it's anybody's guess. Do we rally right back up, and do we have another 900-point rally just to go right back up to where we were? Or do we break through Do we break through this support zone? Because this is a major support zone on the immediate near term. Like this is like the 18,800s is definitely support. So now, do we break through this? And if we break through this, the first area that I'm looking at is going to be right into this, 18,500 to 18,400s. And normally I would say this is a very big move. Like, okay, we're 400 to 500 points away. And yeah, normally that's a big move. But at this, this could be half the day. The next one we're looking for is 18,200, like maybe 18,100, 18,200. There's some support here. It's just, at this point, if we do start to break, we could very well have another leg lower. And with that being said, I like to go and look at an average true move. So Coach Jay knows, and I love this as well. We say when we do sell off, how far can we go? And if we're going to measure how far we could go, let's go ahead and do that, just the way the market's been. So these are pretty dang close to the sell-offs that we've been getting. So we had that big sell-off there. It's really, really close to this. So yeah, you know what? If we do break and if we do sell off, then that gives me the confidence to say 18,500. 400 points lower from here is very reasonable. Yeah, I think that's lining up as a decent zone. 18,500 plus or minus at this stage, 50 points plus or minus. I mean, what's 50 points now? 50 points is just rounding error in the NASDAQ anymore. Just super simple. And yeah, let's see where this market goes. It's very hard to trade, but just scalping it, looking for small profits. And as we start to zoom in, we'll continue to look at this from look at this. That's just, and you can't really even say up. Is this valid to say up like stairs? I mean, sure, you can say this took a lot longer than that, right? This is straight down, so staircase up, elevator down. I mean, elevator up, elevator down. I don't know. I mean, there was no pullbacks today. There was no pullbacks. It was, at least there was some type of market structure yesterday during the rally where we had a little bit of consolidation, a little bit of pullbacks to get up there. And today it was just sell. Like that's all it was. And so we're right back down here to the support zone. One thing that I am looking at is, we had that coming in as buyers back on July 25th. Then we had this come in from buyers from the 700s. And then do we get this coming in as buyers? I'm not going to say this is a shoulder, head, shoulders. I'm looking at this market to break down. I really am. If we do break down, like I said, first target, 18,500s. Next target, like one ATR, right? Or one average true move. And I'm just looking at this and just trying to measure and understand this market tonight. Yeah, this is the move, right? These are the move that we were looking at. Yeah, that's about the move. So it's reasonable to say if we break through this, it's further downside movement. It's getting ugly. Man, I really did think today was going to be a pullback to buy. I was actually looking for some nice longs right here, and I got smashed buying these 330s. But other than that, I think that's about it for the NASDAQ. It's just very volatile. And then there's something I did want to talk about, and we'll next we're going to go to crude oil, and then I'll talk about Nikkei. Nikkei's just going crazy. I know that. So here's a 5-minute chart, and even then we could start to see this major, like this is acting as some major support. And so if we can break through these, 840s, 830s, then yeah, I could see a breakout trade to the downside and having a further extension south. If we could break through and come down and see if we could test these, maybe 500s, we could get this overnight. We really could. We could be waking up tomorrow during the New York session, and we're going to be down, we might be down a few hundred points based off of this pattern. And it's a very, very simple pattern where we're just not finding any buyers down here in the immediate. It doesn't mean we can't reverse, right? Like look at this reversal. That was an immediate reversal and up 900 points. So anything can happen. I mean, if we reverse and if we just shoot right back up, 200 or 300 points, it's not going to be like, wow, that was unexpected, because this market has been doing that. It's very crazy and very volatile. But one thing I wanted to point out, and we're talking about volatility and understanding volatility, this is just insane to me. I've seen it a few times throughout my trading career. Very rarely does this happen, but look at this. I want to point this out, and I want to stress how volatile this market actually is. So we opened up the Asian trading session from right here, 5 p.m. Central, and this has been the market since we opened. New York session's closed. This is before the Asian session opened, and look at these moves. This is a 1-minute chart, and I just want to stress how volatile this market is and how scary it can be if you're trading with size, where you could make and lose a lot of money really fast. And I want to bring out this point because it's very important. So let's take a look at an average true range, an ATR, as I've talked about before. And all this measures is how much the market moves in the period of time. And so we're looking at this. An ATR was hanging around 13 points a minute, 13 points a minute, maybe even 15 points a minute when we opened up at 5 p.m. That is absurd. And then during the New York session, or during power hour, it got up to 36 points a minute. And during the peak of the New York session, 30 points a minute. So that is volatility. That is huge. Per minute, 30 points per minute is just amazing. And then here's, of course, yesterday up to, same again, 30 points per minute. And that's it's just crazy. It's crazy to wrap my head around it. It's crazy to think from a trader. And if we look at these moves that we've got since we've opened up tonight, let's look at it, right? Where I think there's even a measuring tool. Like we had basically a 100-point sell-off. So a 100-point sell-off, and then a 75-point rally, and then a 90-point sell-off. And these moves are just abnormal. And I want everybody to understand this is abnormal moves. 36-point rally, and then a 50-point sell-off. So these moves that are happening in minutes is just something absurd. It's something that the market typically doesn't do, especially in the summer, right? And so being aware that we have this type of volatility, we need to understand that we need to size down. As traders, sizing down and managing risk is very important in this market, especially during the Asian sessions when there's no liquidity. And if we want to talk about liquidity, let's look at the DOM and this depth of the market, where we can see there's almost no liquidity here. And this is, it's already no liquidity during the Asian session. It's very low, but even more so tonight, where the spread, the difference between the bid and the ask, you know what? During the New York session, we could say it's usually around a half a point, maybe a point. But tonight, any order could come through, any of decent size, and push this market, 5 to 10 points in any direction. And 5 to 10 points in any direction, if you just have one contract on, is, $200 to maybe 50. It's just absurd. And I'm just really trying to stress this so that we have a lot of new traders. We have a lot of traders who's been trading for a year or two, and very rarely do you get something like this. And just as I'm talking, the past few minutes as I've been talking, 15-point moves, 10-point moves, and you could see the difference between the bid and ask can really damage traders, especially if you are using market orders, right? Because look at this. Yeah, there we go. There's a 10-point bounce in a minute. So if you use a market order, and instead of getting in at 903, you're getting in at like 901, 90, and so instantly, and this is why I love limit orders, is because market orders, you have slippage, especially in a live account. For example, if you're trying to get out of an order with 5 contracts in a live account and you market it, you think you're getting 901, the next thing you know, you're getting like 897 because look, there's just nothing. There's no liquidity to fill you at this time of night. And it's even, it's just as slow during the New York session in comparison. So that being said, being safe, risk management needs to be number one. Even more so the way it's been going over the past week or so. Now, that being said, yes, same thing, looking at the volatility, looking at the market to see whether we're going to start to hold this level. Maybe we get some type of a pullback. If not, we just break through this level, and if it continues to get volatile, then it's look out below. Like we have had all the earnings, we have even more news coming out tonight, and more of the same volatility, and it's fun to watch, I guess. It's fun to be an audience from a viewer's perspective. It's very, very difficult to trade sometimes where the market can move, especially the NASDAQ. Anyway, let's go ahead. We're going to move over to crude oil. And let's take a look at the hourly. So I am interested in crude. I really am. We had a really ugly sell-off today in crude oil. I mean, it's $2 sell-off from 78.50 to 76.50s, and we're right back down to this level. And so I would be okay, and this is something I am going to be looking at. It is Friday, but this is the area of support that we've been seeing for a while around this 76.50 to, this is a big zone around 76.50, 76.60s. And if we start to see a reversal pattern in oil on these higher time frame, then yeah, I would consider opportunities to find some way to get in long for a move back up towards these $78 a barrel. And I was looking for a pullback. This is pretty dang deep. I did not trade oil today. And for oil to continue the pattern, there is something to be said that we've came up and tested this area in this zone. Maybe we get another rally back up and test this, but I'm watching for this to become support again here in crude oil. I think that's it. I mean, if we do break down, I'm not really looking for shorts because on the daily time frame, we all know and we all seen this pattern that I've been talking about for a while, is I'm looking for this pattern to continue to hold. If we do break down through this pattern, yes, crude could continue to sell off and even be more volatile, maybe back down to 70s. But until then, it's going to be to the long side. I'm going to be looking for areas to buy crude, and this could very, very well be one. We've seen that big bounce yesterday. Looking at this as finding ways to buy crude oil from this beautiful support and resistance zone. Like, this is beautiful support. We broke through it. And if we do start to find support here again in the 76.50s, then I will be looking for opportunities to be getting in long. And yeah, like I said, these are examples. This is not signals, but this is examples of how I like to use very basic support and resistance as looking on these higher time frames. So looking at higher time frames, and then I'm starting to zoom in, right? Zooming into the lower time frames, and then using very basic, simple technical, patterns to get into trades. So using the higher time frames to understand major support and resistance, and then I start to zoom in, looking at these lower time frames, and then I continue to zoom in, say on the 5-minute, to start executing my orders. So we are coming down into this zone, and if this is the zone that I'm looking to get long crude, the one thing that I will be is looking for, technical patterns. And I know crude oil loves to run for stops. So very much we could easily see a run for stops or a run of liquidity like crude oil so often does. And if we do, that could be a very reasonable way to get into crude for a stop loss run, a run of liquidity, and then take that reversal back up to the north side. It's looking like we are starting to continue to sell off. So yeah, very realistic. This is a very realistic pattern. I won't be on to slow markets until Sunday. So yeah, maybe Sunday we'll be talking about how we ran for liquidity and we rallied up. We did that here. This is a more extreme example where we ran for liquidity from everyone who was buying this support. We had that big 500 contract order get filled at 75. And yeah, maybe we run for liquidity, consolidate, find some type of way and reversal pattern to come back up to these 80s and these highs. Next, let's go ahead and take a look at Nikkei. Just real brief, because then we have gold to talk about. Nikkei's just been selling off. I mean, there's really not much to talk about. Take a look at the daily here on Nikkei. This is the Japanese market. It's even uglier than the NASDAQ. We've basically had some type of a double top. We broke through this major support, and it's selling off. The next support zone that I could probably see right here in the Nikkei, 35,700s, 35,800s, but it's just sell. Next area that's more realistic is 34,000. I would not be surprised if Nikkei just sells off all the way down to 34,000. It's just selling off. This is very ugly. But from a technical standpoint, yeah, 35,700s, 800s, and then 34,000. But I'm not going to be touching Nikkei. Definitely not going to be looking to buy it anytime soon. I'm going to wait for this move to happen. And if we do our regular, expected move, I mean, this is pretty dang dramatic, right? Where if we do get another move like this, I mean, there we go. It's kind of weird how that works out. Not all the time, but a lot of the time. Is if we have another move like we just did on the Nikkei, we could see it's pretty close to lining up to that 34,000. Anyway, let's move to gold, and we'll talk about the gold trade. Let me adjust my charts a little bit. There we go. Okay, here's gold. We are back. We are starting to continue to break. We know Coach Jay and I last night, we watched gold trade 2,500, and yeah, we're right back up there again. One thing I'm thinking of is is this a channel? Is this a channel? I don't know. It's not very clear to me as a channel. Obviously, with everything that's going on in the markets, gold is looking pretty dang bullish. And if we zoom into a 1-hour chart, it's the same thing, right? Just rally, and it's been rallying for a while. We came down, we tested basically a dip, right? A higher low. We're continuing to make higher lows. I mean, take a look at this. There's 1, 2, 3 higher lows, and then, broke out, tested support again, breaking out. And every one of these pullbacks have been great opportunities to get long gold from an hourly standpoint. And, then again, right? We've sold off. We found support around, 2480s, and we're rallied, and we're right back up to these high 2490s. So 2490s. The question is going to be, are we going to be able to break out of 2,500? 2,500 is a major psychological level. And, that's fair to say this is a big resistance zone. 2496 to 25.6. This is a big resistance zone. And, I would love to see a break above this. And, very much this could be a bullish flag pattern where, this is something like this, right? This is definitely an opportunity as a bullish flag pattern and looking for a break above this and break into those 2500s and staying in those 2500s. As we zoom in, let's take a look at a 5-minute chart. It's more of the same, right? This was a trade that happened. This was a very simple trade where bullish flag, right? Here's another one, bullish flag over here on gold. And yeah, I mean, simple. It's simple but effective. Like these flagging patterns on gold in the direction of this higher time frame trend. It's simple to say. It's hard to do and execute. And so, you know what? Maybe we do something that's similar. Maybe we see a bullish flag and we look for a break to the long side and see if we could see 2,500 again. Are we going to see 2,500 again tonight during slow markets? I don't know. We'll see it. And I'm looking at the 1-minute chart, and it's looking very much like that. As I zoom into the 1-minute chart, here is that beautiful flagging pattern we've seen on the 5-minute chart. We broke above that. There's the break and the test. This is the pattern I love, where we break out of a resistance zone, we go back, we test it, and then we rally. We seen that last night, and maybe we do something similar. So let's do it. Let's trade it. We're coming up at 8 p.m. Central, and just like last night and the night before, let's go ahead and see if we can trade gold and do our journal entries and take notes and become better traders. And remember, this is a trading concept. It's not a signals class, but it's a way that us as traders can place trades, see theoreticals, like what if I would have done this? What if I would have done that? Be able to journal it, be able to build a strategy, understand how to trade a specific market. The same thing works on, basically any market in terms of journaling, practicing in a simulated environment, and, trying to become better. So here we are. I do like this flagging pattern here in gold. Let's see, there is some nice support right around 24.93. Of course, my bias would be to the long side. I'd love to get into a long gold. So getting in long is preferred, but there is a case to short if we do break down for a run back down into these 80s. So I'm going to try and be non-biased, but I do have a little bit of a bias on this higher time frame. It's very bullish. So as much as I want to be non-biased for this trade, for the sake of education and journaling, I am biased to the long side. So 1-minute chart, here we are right at the 8 p.m. Central Standard, and then I'll start getting to questions. So once I get this trade and once I have a moment, then I will be getting to everyone's questions, and we'll do a fun Q&A and do talk more about technicals, talk more about strategies and markets. That's the beauty about starting early. So here we are, still consolidating right around this 93. And so do we take the breakdown? That would have been the entry, 93.4. So 93.4. I think that was the trade. Let's see. If we start to sell off and find support, then I'll take it to the long side. But that was the non-biased breakdown. If we could find ourselves to not be biased, that was the trade. 93.3. Maybe if you get bad orders, 93.2 would be the entry. So let's see how this works. Yeah. And you know what? The way the gold's been acting lately is waiting for the initial move and then placing a trade after. So the way gold's been acting is react after the initial move. So that could be the initial move. And I'm just going to go ahead and join. That looks like a reversal to me. We had that sell off. We got back down. I'm going to go ahead and get into a long, risking 180. we got that reversal, and now let's see if we can break out to the long side and do our journaling. So here comes the journal. Let's see if we get a push and a breakout and maybe see 2500s. Ooh, okay. So far, so good. Risking 180. So far, we're already at a 1-to-1. So 1-to-1 basically is right there. That's a 1-to-1. Yeah, this was just a reversal. That's all it was. We sold off. We got the initial reaction, and now we started to go in the direction of our bias based off that higher time frame. And here we are. If we was looking for a 1-to-1, that would have been no, not yet. That wouldn't have been the 1-to-1. Risking 180. We'll see how this goes. And so I'm actually thinking if we could get into a second contract. If we get into a second contract if we break back up again. I don't mind getting in two. I mean, this would be almost identical to last night's trade where we get in long, and then if we do start to break back up, we get into a second one on the break of that. So I would be okay with waiting. I don't want to add here. For me, the add would be when we break up, and then we kind of get more of a confirmation, and we're getting in as the market's going in our direction. So there's an argument to be made both where you could get in, on a second contract, but it's more unlikely. It's less probable for me in the way that I view the market getting into a second one when we might have a failed break to the long side. And if that makes sense. You know what? Yeah, I was in ticks, right? Bam, there we go. Ticks. Ticks are so much better. So here we go. Let's see how it plays out tonight. Yeah, LAFTA. I switched it back to dollars in the combines because I had to see when you're trying to pass combines, you can't really do ticks. I was trying to pass, I was scalping. I was trying to get exactly 4,500. I had to see the dollar amounts. Ticks over dollars is more important to me, and especially in terms of teaching, right? Whether this is one contract or 10 contracts, the process should be the same. The process should almost always, I say almost always because nothing's absolute. Whether it's one contract or two contracts or 5 contracts, the trade setup is the same. It's process over profits, where we wouldn't want our decisions to be based off of our P&L or off of the dollar amount. It needs to be based off of the setup. So for this example, I'm risking 18 ticks and to push and see if we could trail it. Let's take a look at some profit targets actually. So my first profit target would be probably right up there, right up. And you can see where we've seen a little bit of resistance here last night. And again, this morning, if we do start to break up, we'll see. So risking 18 ticks to make 56 ticks and then possibly trail the second one. So there's the risk reward. And when we get triggered in, our average would be bumped up a little bit and our risk would increase. So haven't been triggered into the second one yet. We're right close to breaking above that 24.8. 24.8. We'll get triggered in at 24.9. Then we'll see. There we go. Got triggered into the second one. So we are now risking 27 ticks on this particular trade. And let's see. Here we go. I want to see that follow through. I don't like that. Yeah, you see how that just kind of whipped me in, and then we reversed. But let's see if we could get this volatility. Volatility is starting to pick up. Maybe having it like this looks a little bit better. See if we can get a break above. So the idea is to take profit for one and then trail the second contract if we do. If not, we minus 27 ticks. And that would be it. Last night, I think we made 60 something ticks. I don't know. Vero, do I always wait and jump in at my key levels? I mean, it depends on what the market's doing, but the key levels are key for a reason, right? How to do ticks? Just settings and then charts and data, and then you could just change value from dollars, ticks, or percentages. Yeah, that's it. Hey, do you not use volume? If not, why? I don't use volume. Coach Jay and some of the other traders, they love volume. It's just me personally, I've never used volume. I use, pure technical analysis and understanding the time of day, watching the technical analysis. That's it. It's a little bit, slow for gold, which is interesting. We did get that nice move up like 20 minutes before. Yeah, this is particularly, like I said, this is for educational purposes only. We're looking at gold, but the same concepts that I try and talk about can be applied to any market. It really can. The idea of getting in and getting out of trades, the idea of, managing a stop loss, managing take profits, and then being able to journal and get into the trades and for all of those. And while I'm here, I'm going to go ahead and let's journal this. It looks like it's going to stop me out. So I'm going to start this journal and I'm going to go ahead and write through here. Entry after initial move reversed. Oh. So there's my entry after the initial move reversed. And then I'm going to go ahead and go here. And this is add one contract after breakout. So there's that. And then this would be stopped out minus 26 ticks. So stopped out minus 26 ticks, 2 contracts. And tonight looks like it might be a quick one. So really quick and easy. Let's see. Let's see if this pays or not pays. Let's see if this is a quick trade. Yeah, it's Fade Dakota Friday. Friday starts Thursday night, guys. Yeah, that's a good point there. Yeah, it's Fade Dakota Friday, and Friday starts at 5 p.m. Central Thursday night. So that is something to consider. That's funny. That is a good point. I haven't thought about it. I'm used to saying that during the fast markets when I'm on with Coach Jay for fast markets in the morning. But yeah, you're right. It starts tonight. It does in Australia. Yeah, in Australia it's already Friday. Yeah, I need to relabel an account that says Fading Friday, and then I just take the opposite of everything I do on Fridays. So, it's all funny. It's funny and it's jokes, but there is something to that. when we're understanding our trading statistics, there is something to that. I would not, and maybe I do that. Maybe I start a combine that I only trade on Fridays, and I call it Fade Friday, Friday Fade. And then whenever I want to get into a trade, I do the opposite, and then see how the statistics play out. There is something to that. There's not a, you can, what do you want to call it? There's not a wrong way to trade, but that is definitely one of them to where you could do it. I could do it, and I might actually do that. Friday fading, Friday faders, there's something to that. I mean, that's actually a good idea. I'm going to do it. I really am. I'm going to actually put a note. Sticky note. I don't mind spending $150 on that. So start a Fade Friday combine. Because what if I pass that combine? F it Friday? Okay, I'm gonna do that. Start an F it Friday combine. So there we go. F it Friday combine coming in, and I'm only going to be trading it on Fridays. So we shall see, because that would have been a great trade. It would have been a, look at this. The initial move would have been correct, right? The initial breakout would have been correct. So screenshot that, baby. And anyway, now we're here for analysis. That was one heck of a move. So let's go through this. Okay, so I waited for the reversal of the initial move. Now, let's say we didn't wait, and this is something that it's very small. This is a very small thing, but following a process, right, where we were just talking, I was just talking, the initial break would have got us in at 93.3. So if we would have sold this at 93.3 and we put the stop loss at 95.6, so if we would have got in short at 93.3, and let's do this, this trade would have been absolutely amazing. Wow. So yeah, that's something to be said as well. So if we, oh my gosh, and there it goes. There it goes. Right back down to these 80s. So there is something to be said about that, where the initial trade, the very initial break of the 8 p.m. trade would have been paid. It would have been up a lot. That's huge. That's 100 ticks, right? So yeah, that is definitely the initial trade now that I'm looking at it. Because yeah, let me make sure. So we got in here. It's 8:55, and the initial trade getting short 893.3. So getting short, having the stop loss above that pivot, was the correct move. That was it. That was the correct move. Getting in short, and so now that I'm thinking about this, we have the beauty of hindsight at our backs, and after the beauty of hindsight is I let my bias get to me, I think, on this trade, where I was like, it's going to be, I want to try and get into this with no bias, because that is the point of this trade, is a non-biased breakout. And the bias of me was to looking for longs to come up and test 2,500, and I waited for the initial move. I reacted off of it, And that is the reason, because you could see that something very, very simple like that made a difference between minus 26 ticks or plus, oh man, whatever this would have been. Because you can imagine, trailing the stop. And so if we would have got in at 24.93, that initial move, trailing the stop would have been like, that's already $1,300 per contract. That's $1,300. That's a $13 from our entry, $14 from our entry. And so that right there is a beautiful example of not being biased on a breakout trade. This should be the non-biased trade is what this was planned for, the 8 p.m. breakout up or down. It could break out to the long side, it break out to the short side. But when I did my analysis on the higher time frame, I was biased to the long side, and I didn't get triggered in, and I didn't let that trigger me in when I definitely should have. But what a beautiful short. Who took that short, guys? There has to be somebody in this YouTube chat that was getting in short and made some great money on that. There's another proof, right? 8 p.m. Central, it's slow markets, but yet there's opportunity. Oh man, look at you guys. Short. Let me do a poll, guys. Let's see if we could do a poll. Short 3. You guys traded it better than I did. Let me see if I can get a poll going. I'm really curious on percentages. I didn't watch the tilt, but I could have watched the tilt and seen it. That's a thing of beauty. Let's go ahead and do this pop out chat. So there's a beautiful thing about timing and direction. Let's do this poll. Oh, we don't want a Q&A. We want a poll. Who was short gold? Just yes if you were short, no if you were not. Let's see how everybody else, how did the chat do? There we go. There you go. Slow markets is not boring. It is not slow on gold. There's something to this, and it's been like this for months, right? Where 8 p.m. Central, gold has a spike in volatility, and there is a beautiful opportunity to either play a breakout trade or a reversal. There's a trade to be had, and it seems like almost every night in gold, it starts to move at 8 p.m. So I love this. This makes me extremely happy. And I think this is proof that it doesn't really matter with the time of day that we are trading. You can find an opportunity in this market at 8 p.m. Central at night. This trade was a loser. I lost 26 ticks. Last night was a great winner. Made 62 ticks or whatever it was. But yeah, you guys caught this short. 34%. So 34% of you guys caught that short. Beautiful. We sold off right back down into this support zone. That was a good area for some targets. Down here in this support, looking for those targets. So if you got in short, great. Anyway, let's look at the 5-minute chart. Now we have maybe this coming into play. Is that coming into play? Did that come into play and we start to bounce off of it? Because there's something to this, right? Where this is a good support trend line on gold, and it looks like that came into play. So look, there was an opportunity to get short and make money, and maybe if you were able to find it, there could have very well been an opportunity to buy this at a support trend line. So there's definitely volatility and opportunity here on gold. Okay, well, that being said, let's go ahead and move on to the next. We're moving right along. We have 40 minutes left in class. Let's get to some questions, and we'll continue to look at these different markets. So Yeah, that was gold. Love it. Love to see this volatility. Let's move on. I want to take a look at Nikkei. Is Nikkei still just selling off? Yeah, we kind of slowed down a little bit, but who wants to buy the Nikkei? That would be a scary trade to try and buy this. Nikkei rising some. Yeah, I mean, if you want to call this, this is just a pullback. Okay, let's get to some of these questions, and I'll continue to watch, and we'll look at these different markets. If you guys see something, call it out. We'll look at it. Dakota, you said you were implementing ES and stopped looking at it, but didn't explain why. Does that mean we should stop looking at it again too? Is there something you know that we don't? No, ES is perfectly valid. Let's take a look at ES now. Oh man, ES is looking even uglier than I thought. ES looks more ugly than the NASDAQ. So here is the ES. Let's go through the ES, right? Here's the hourly on the ES. Very similar to the NASDAQ. It looked like we were getting a double bottom and a reversal here on the hourly where we broke out of this resistance. We had a beautiful breakout. And sure enough, today we just sold all the way back down to this support. So now we are at the support. And the next thing that we can look for is if we do start to break down here on the ES. Very similar to the NASDAQ. I mean, ES is a lot more tame compared to the NASDAQ. I could definitely see us seeing 5370s, 5370 plus or minus a couple dollars as support here on ES. So 5370 seems to be a good area on ES. And the reason why I say it's looking a lot uglier is if we go to a 5-minute chart, like look at this massive sell-off, just like like NASDAQ and other ones. But this is a lot cleaner pattern, right? I mean, it's the same thing where this can very well be a bearish flag. And take that breakdown looking for, wow, what was we looking at? 3470. Look back at the hourly chart. Yeah, 5370. So if we get that breakdown, and if we have a break of that support, then yeah, 5370. So that is very realistic in the ES. We shall see. Or, a flagging pattern. I mean, this looking like a continuation. Typically, the pattern goes in the direction of the trend. However, we could break out, whether it's a fake out, like some type of a fake out, and then sell off, or we just break out and go right back up towards, 5520, 5519. So, of course, I'm going to be biased in the current direction. From a technical standpoint, this flagging pattern usually has a more likelihood that it continues in the direction that it started going in. But look at this one, right? This is not as bearish as it looks like because we just immediately reversed. And of course, with news and the craziness into this market, yeah, this is a key support zone here in ES. And if we break it, then yeah, why not? Why would we not see 2370? I mean, we have a little bit of support here in the 5418s. And then we have this is a psychological level. So this is something that we could be watching for is 5400 evens, right? 5400 even, 5400, a big round number. That's going to be the first area before we see that. Yeah, that's going to be interesting to watch. So I haven't focused on the ES just because NASDAQ's been so crazy, and I've been focusing on trading the NASDAQ, and I'll try and do better at talking about the ES, but very similar to the NASDAQ. It's a lot cleaner. ES is always a lot cleaner. And if you're new, yeah, I'm going to be recommending the ES. And yeah, maybe here's a little foreshadowing, everybody here in slow markets. Here's a little bit of a hint or some foreshadowing. There may be a reason why I will be talking more about ES in the near future. So there's a little bit of foreshadowing. I'm not going to say much, but yeah, there's going to be more ES in the future with pure conversations about the ES. And the fact that I say ES is for, newer traders, someone who's just learning the markets. Hopefully you guys could put 2 and 2 together. New traders, someone's just learning the markets. ES is for that. Why would Coach Dakota be talking about the ES? That would give you guys something to think about. That being said, let's take a look at the NASDAQ. Yeah, see NASDAQ. This is NASDAQ. Very similar. It's very, very similar, but it's not as clean. And Coin 25, maybe easier is not the right word. It's more consistent, or it's not as whipsaw. It's not as crazy. So maybe easier is not the right word, but NASDAQ is just a lot more volatile. So there you go. I'm not giving any more clues. Dakota, can you explain your scalping strategy you use lately in fast markets? I mean, it's just like what we did here on gold. It's the same thing that we did on gold. Imagine me what I've been talking about on gold. I do that on the NASDAQ. For example, here's a quick example. Okay, here's one. Here is a pattern. Boom, jumped into a long gold. This is going to be a good example, looking for a nice trade. So this is the trade. And what I do, and this is just really, really brief. Okay, guys, like I said, brief. All I do is what I've been looking for are these patterns, just like I talk about all the time, some technical pattern at a major support and resistance zone. I look for a break, and then I'm just looking for like quick scalps, like just really, really quick scalps. And so, for example, like here's gold. If we do get a break above this, maybe we see a nice little spike, and the very next thing I see, maybe we see a spike back up into this, this was resistance, or this was support. So this is support. Will support become resistance? And so for this example, let's just say, oh, okay, well, if we break above this, because right now this was looking like it's becoming resistance. And if we break above this, very well, we could just jump up and see the next zone. So that's what it is. And then I have my stop loss on the other ones. The risk rewards are not as good for me because it's just really quick. And typically I've only been getting 1-to-1 risk rewards on this trading style. But because the NASDAQ and these markets have been so volatile, technicals have been playing more. Technicals are working out a lot better for me in much, much volatile markets. So I hope that makes sense. So here we go. Here's a beautiful example of what I've been doing in the New York session on NASDAQ. So just a beautiful technical pattern in a volatile market. And yeah, it's 1-to-1. I have a tight stop. I trail it. And just like I've been trading these, it's the same thing. Nice, volatile. And when we have this type of volatility, I resort on the smaller time frame technicals on trades like this. This is, to me, would be a flagging pattern and looking to break out, looking to break above it, and go to the next zone, going to the next area, which is right up here around these 88s. Now, that's always the question, is it's a zone, right? It's a zone. So with zones, it's hard to be very accurate. So yeah, you know what? Maybe there was a reason to put my take profit there, or this could be one of them. And I mean, this is a decent zone, to be honest, because look, there's a lot of resistance there. Then that resistance became support. And then guess what? Maybe it becomes resistance again. Yeah, so that is a very basic top-down overview of how I've been trading a lot more recently. Yeah, it's a change. I've traded it before. I have plenty of experience trading this type of a strategy, really quick, smaller time frames. Before I was using the higher time frames tonight, and this past week or so, it's been trades like this. Yeah. So that's it. Yeah, scalping's good, but to me, there's more profit to be made on catching a bigger piece of a trend. So I love scalping. Don't get me wrong. I have nothing against it. It's been really good and it's amazing in this type of a market. But to me, and the most of my profits throughout my trading career and my experience, more profits come for me when we get more consistent markets and you're catching a bigger piece of the trend. And, you have less commissions, you have less room for human error, you have less moments like this where it comes up and it just barely hits your take profit and then turns around and hits your stop loss. And plus there's less room for human error, less trades, less decisions. It's less stressful. So I love, longer term time frames like an hourly and then placing a trade on the 5 minute and holding for a bigger move compared to this. It doesn't mean I won't do it or I don't like it, especially in a volatile market like we have been in for the past week or two. It's just moments like this can just piss me off. It really does. When you have a great trade and then you just have your take profit just one tick off and something like this happens and you just get pissed off. So this is a lot easier to manage. It's a lot less focused. You don't have to sit here and eyeball the market, where if I go use the bathroom and come back, the market moves way too fast. But there's the reason why sometimes I don't like this. Like, look at that. Yep, there we go. One tick off. Wow. Oh, man. Something else. This happens more often. Yeah, it's dumb. Look, maybe it just goes one tick from my stop loss and then goes up. Yeah. 17 ticks, is that should I have done 16, right, for an even number? Yeah, no, this is a good example. It's a good example. Whatever. This is just my coach's combine where we're talking through this. Wow, how's that for a take profit and how's that for a stop loss? Oh. Yeah, and it doesn't really matter which market I'm trading very often. Yeah, I don't know. So there's an example. Like I said, this is more of a concept. This is not an exact trade that I would be taking. Doesn't matter whether I make or lose money on that one. Anyway, let's get to some more questions and we'll go from there. Dakota, do you have a favorite mentor? No, I don't really have a favorite mentor. I'd love to listen to Hoag and Coach Jay. Working here at Topstep has been amazing. Hoag is amazing. Coach Jay, Eddie, heck, even MP. And I know everyone jokes with MP and like Topstep's core and traders come from the trading floors. And that's something you just don't get anywhere else. I don't really have a mentor. I would say this. If I had one person that has changed my trading the most, it's going to be this guy. Let me show you. Tom, maybe you guys don't know him. Tom Sajnoff. So this guy has changed my trading probably the most in the positive way. Tom Sajnoff and options trading. I listened to him when I was a kid. I watched Tasty Trade. He's my all-time favorite mentor. If I was going to say that, it would be him. and just watching to him, listening to him, and he had the radio, and then TD or Tasty Trade and Thinkorswim. Like, that is what I grew up in, and he and his team has made me. Yeah, him and Nick, Tom and Nick is great, and that's But I wouldn't say like they're my mentor, right? Like where they helped me one-on-one, but Tom and Tony, I like Tony. Tony was great. Tony Batista. Yes, Tom and Tony Batista. Listening to them has helped me a lot, but man, that feels like so long ago. Like, there's some videos from like 20 years ago, and I would just watch them on YouTube every single night on YouTube. Like, they'd go live, they had the radio, and I would just sit there and listen, and it was fun. But there you go. The Fade Dakota Fridays, the market just has to do that, right? I had my take profit at 87.9. It went up and touched my take profit, did not fill, and then turned around and filled my stop loss. So Fade Dakota Fridays is still on, baby. It's going to continue, and this should be in my Fade, the F It Friday account. So the F It Friday account strikes again. Like, look at that. That was something else, guys. If F It Friday, F It Friday is a thing, that is a sign. If there's something there, that's a sign. My take profit, no joke, was at right there. Like, that was my take profit, 87.9, and it sure enough, as fate would have it, if there's the trading gods, if there's fate, leaving it up to the trading gods to keep me honest on F It Friday. Is that going to be a thing now, everybody? Is that going to be something? Fade Dakota Friday, Fade It Friday, F It Friday. I don't know if I could say F It Friday on Topstep TV, but we'll call it Fade It Friday. Fade It Friday is more appropriate. I might mention it on Topstep TV. I don't know if I'd get in trouble for saying that, but we'll say Fade It Friday. That's going to be my new combine starting tomorrow. I'm going to call it Fade It Friday. We actually started tonight. Tonight's Friday. Those two trades were a beautiful example. I didn't clearly see the guest today. No, I didn't watch the guest, if you guys are referring to some guest that came on. Manfred was awesome. Connell. Okay, I might have to go and rewatch the... When was he on? Manfred was the guest today. Was he on for Power Hour? Fire drill. It didn't take profit all week. A bunch of F-bombs. You know what? To be honest, guys, I will say this. I will say some of the most honest people I know and I talk to cuss the most. And I don't, it's weird to say that. I don't know if there's a correlation to that. Coach Jay says it's power players. Yeah, some of the most honest people I know, they just cuss. It's like every other word, like every sentence, it's swearing, but they are so nice. They are like some of the most honest people. Well, they'll tell you whatever is on their mind, or they'll tell you regardless of whether it hurts your feelings or not. And that's true. But the funny thing is that, like, I want them on my side. For example, I have a cousin or I have a close friend, and he is just like that. Just, he drinks, he, smokes marijuana, and, cusses a lot. But when the crap hits the fan or in any bad situation, we're walking down the street and there's like 6 people and you're getting mugged or jumped. There's nobody else in this world that I would want by my side than someone like that. So, So they They're the best, some of the best. It is. I mean, anyway, that being said, oh, you know what? Let's see if we could take this again. I'm going to do this again. We'll see if this plays out. Because now this is another setup for a break to the long side. Okay, here we go. I want to get long, so maybe I should have just shorted this in a... I need to start that combine, that Fade Friday combine. Okay, tomorrow I'll have a combine, and I'm going to be calling it Fade Friday. And we're going to do that. So let's get to some more questions. How do you stop being a perma bull? I was unbeatable from mid-April to mid-July. Now I haven't had a winning day. Ooh, that is a good question. So the question, how do you stop being biased? Like, how do you stop from being a perma bull? That's hard. Because, yeah, the market for the past 6 months has really programmed us to buy the dip, right? Buy the dip, all-time highs, new highs. And the hardest part about trading is transitioning. You got to understand the market is always going to be transitioning. And when the market does transition, it's hard to recognize sometimes. The traders and the people who do recognize it the quickest are often the most profitable, right? And so, for example, if we switch to the NASDAQ, and I want to talk about the NASDAQ because NASDAQ's a great example, and if we go to a daily chart, and yes, a perma bull has made amazing money since basically the beginning of the year, since basically this right here, January 2023. So like perma bull, and it just depends on your time frame, right? So yeah, the perma bull does really great in rallying markets and trending markets. There is something to be said back in the fall of last year, right? All the bulls who did really well in this trending market started to struggle here. And then again, you know, perma bulls are doing amazing in this type of a market environment, but then they might struggle here. And then, you know, same again, bulls are doing amazing in this type of a market. And then now, like you said, you're struggling now. And the question is, how do you change that? How do you recognize when to change? Well, you have to have some set of rules in your own strategy. For example, there was a realistic way to change for me when we broke down below this 19,700s. And to me, it's like, hey, when we broke down this, you know, there could have been a reason to change. But I was still bullish, right? I was I was bearish going up here. I would say, hey, I'm bearish. I'm looking for a pullback. Well, we got the pullback. And we even broke through this. And now that we're down here, and now that we've been in this zone, I'm bullish. I'm like, okay, I'm bullish. But then if we do break down through this again, then, you know, that's hard, right? Because we're going to have a decent chance to continue to sell off or continue to break down. And it's just, how do we change our mindset? How do we change the mindset from being bullish to bearish? And when do we change that? And so if you remember last night, we had this resistance zone. And when we got up there, I did take a short. I took a short at 712, and I didn't hold it as long as I really wish I could have. But, you know, all day today, it was the bears and everyone who was shorting the market today made amazing money. And the bulls who was looking to buy the dips, I was one of them, and I ended up getting for lack of a better term, my face ripped off because I was buying these 330s. I was buying these low 300s, looking for the market to have another bounce and maybe push back up to 500s, maybe 400s. So I was looking for that. And, sure enough, I took losses. And, we didn't. We sold off and we went right back down and into this consolidation zone, and we went right back down to these lows. So how do you transition? It's hard. It really is hard, especially since we've been into such a strong bullish market. We just have to be able to change. We have to change with the market. For me, it's still hard. So I decided to switch to a more short-term strategy, and I'm looking for more scalps. I'm looking for smaller targets. I'm looking for scalps. I'm looking for smaller trades, and it started to work out a little bit better for me, basing it on smaller time frame technicals. For example, like here's one that I probably missed. Maybe a nice little breakout, right? Looking for 10 points. When there is an increase in volatility, scalping is a lot easier for me from a technical standpoint. And yeah, we joke around because it's Fade Friday, but there is something to technicals, right? For example, this could have been a decent trade. It really was. It really was, because yes, it hit my take profit and it didn't fill it and it turned around, but that could be a decent trade. That very much could have been a profit. The one that I'm in right now was a technical trade. I was looking for a breakout of this area, and I'm looking for a break back into this consolidation zone, right? I was looking for a break back above here and thinking, if we break above there, there's a chance that I could, take profit back at the high of this zone. So it's, for me, just trying to change and changing your strategy, maybe changing your time frame. It's hard. It really is hard. And we joke about Fade Friday. I mean, there is something to that, but I'm not going to change the way I trade on Friday, but I will test it out. I think it's a fun thing to do, is to start a combine. And whatever I want to trade on Friday, I do the opposite of. But now that I changed my strategy, I'm starting to think, maybe Fade Fridays might not work, but we'll see. We will definitely see tomorrow how the strategy that I'm trading this week holds up on Friday. We'll see. Yeah, like there we go. There's another one. So close to my take profit and then turns right around. So, dang it. Let's get to a few more questions. Yeah, what the heck? Coach Dakota, when you scalp, do you still need confirmation from 3-bar reversals? When I scalp, it's a bunch of different technicals. It's not just 3-bar reversals. If I was using only 3-bar reversals, then, I might have been able to get in down here, right? There's a lot of different technical patterns that I use. 3-bar reversals, breakout trades, reversal trades, technical patterns. A lot of different ones that can definitely be used when trading the technicals. Fade old Dakota Friday, not new. We'll see. Maybe it still is. I mean, according to the way the market and this gold trading is tonight, they would have been working. I think my take profits have just been too wide, because that one ticked my take profit. So it was a good trade. This one, whoops. What would I do there? Oh, that entered. See, I'm still getting used to this platform. That entered me into 4 of them. Okay, yeah, I'm going to just get out of that. I don't know why that entered me into 4. I fat fingered that one. See? I right click and yeah. There's that really just that was weird. See, I accidentally right clicked and boom, boom. Actually, let's do this. I'm going to go ahead and get out of a couple of them. Stay in one. Cheap ad. Well, it was a mistake. I didn't mean to do that. I mean, it looked like it would be a cheap ad. I want to get out of this. That was weird. hotkeys. Yeah, maybe I set my stream up. I might. I mean, that maybe my new strategy, maybe some hotkeys would be useful. So I don't do things like that. Right click and fat finger getting in and getting out of these markets. I have my stream deck right here. So definitely hotkeys with the way that I'm trading, just quick in and out could be good for me. But I'm using these buttons over here. I usually use these buttons over here on the right hand side, just buy market, sell market, join bid, and I just use my mouse and I left click these. But when I right click and fat finger it like this, yeah, that was dumb. So we'll see how the hotkeys work. Let's see. A few more questions. And I'm going to finish it there. All right, we're going to get out of that one. That was weird. Well, the thing is, I just switched platforms. So I'm getting used to this. There's not something to be said, I'm used to it. So I'm getting used to this. I think I answered most of your guys' questions. There we go. Robbie, last one, and I'm going to end it here, is how do I determine the error for support and resistance? Like the margin of error. Like how do I determine the zone? So example, look at this. This is a support zone. And that's fair to say, you know what, maybe 87.8 all the way up to 88.6. And the only reason I say that, I'm going to dive more in depth to this because I've got a lot of questions. Like, how did I determine this as we zoom out? How did I determine this as a support zone? Well, there's a lot of things other than just me getting used and seeing this with my eyes. If we zoom in and we look at all of these small pivot points, right? If we look at all these pivot points and I'm looking at where are all the moves where buyers or sellers are coming in, you could point them out. It's very simple. And maybe you could even extend this, right? And it's really up to our own discretion because there's a lot of discretion when it comes to this. Yeah, now look at gold's rally. But yeah, this is a good example because, you know, maybe what do you use, right? Are you going to use every one of these? Are you going to use the ones up here? Maybe if you decide not to use that higher one, there's an argument to be said, okay, I'm going to use it maybe this. You could tighten it up. But there is a lot of discretion when it comes to how we as traders decide what is support and resistance zones. The zone is obvious. Like this one, to me, it's very obvious. There's a lot of buyers stepping in here, support and resistance. And look, it even played out again, right? It played out again to an extent. We extend it. There's resistance. There's support. Yeah, so it's hard to say, right? Because it's not exact. If somebody was to argue that it's a little bit lower, then yeah, that worked out pretty well. And you cover some of this. But you could see how discretionary it can be. And heck, if I sit here and do this long enough, next thing we know, everything's a zone, right? Because then I could argue this, I could argue that. Then I could come over here and say, well, what about this one? What about that one? And it really is, and it depends on what you determine as support and resistance. But for me, when I look at this and as I see it for the first time, yeah, I see it like this. And then it depends your time frame. If you zoom out to a 5-minute time frame, things will look different. If you change time frames, then we could even pick up some from all the way, the previous day maybe. There's some support right there. Then if we look at an hourly chart, same thing, right? Oh, look, we could extend that little zone all the way out here to the 16th and the 17th. There's some support or resistance there. And it's very hard, right? Like, so that is a tough thing to figure out because it's not a science. I would say it's more of an art than it is a science. However, there is some level of science to it because you're not going to just be doing it everywhere. but I would say it's more art than science, depending on what market you're using. And, you know, that goes back to what I'm saying about ES and why I said easier, but maybe it goes back to ES and why I say ES is more consistent, right? In terms of looking at that support and resistance zone, right? That is a very clear and obvious support, right? Very clear, very obvious support. Now we go to, say, the NASDAQ, and we look at that same thing. It's pretty clear and obvious. It's a little bit more wild, but it is clear and obvious. But that wasn't a good example. That was not a good example. I was thinking it would be a good example. But the ES typically has more consistency when it comes to being able to identify support and resistance, if that's a fair thing to say. So anyway, I think I'm going to leave it at that. Fade Fridays. F-it Friday is still valid. So far, 0 for 3, 0 for 2, 0 for 2, 0 for 3. Is that what it is? Let's pull it up. Let's pull up. No, I had that one winner. 1 for 4. Let's see. Yeah, 1 for 4 on the 8th. So right there. I'm 1 for 4 tonight. So Fade Fridays is valid so far. Let's see how the New York session goes. And if you're still around, I will see you then. Now remember, Dee has her London session, 3:30 a.m. Central Standard Time. I have yet to catch it. I've watched a couple of her recordings. They're nice. I've enjoyed them. And then, you know what? Do journaling. Do journaling. Trust me, it's very important. And then we all know being able to label label your combine. That's very nice. It's very useful. As you can see, I have this one labeled coaches. All right. I think that's it. Take care, everybody, and I will see you